Hello students and welcome to the explanation on cash budgets. And this question is called Zuzu Traders. It's quite an interesting question and I want us to look at it because it contains a lot of interesting calculations, markups and data collections. The question says that Zuzu traders import exceptional teacups and saucers for resale to retailers. The company sells its products at cost plus 50%. In note number 1, you are given the purchases in the third quarter of 2017. So the block contains the months as well as the details. So they tell us that for July, August, and September, we have purchased respectively 2,000, 1,800, and 2,400 units at respectively 20 Rand and 22 Rand. Beneath the table, we are told that all units are purchased on credit and that the supplier allows a 30-day credit period and that we strictly pay 1 month after the purchase. During June, 1,500 units were purchased at a cost of 18 Rand. Note number 2 says that past records have shown that 90% of inventory is sold in the following month. Every 3 months, the company gathers the unsold inventory and it is sold at an auction at cost. The next auction is held in September, and at this auction, we will be selling the closing inventory of June, July, and August. In note O, just to refer back, please note the importance of that sentence. Inventory purchased is sold in the following month. Very, very important to note that if we buy it in June, it is only sold in July, etc. In note number 3, it says that Zuzu has one regular customer, and this customer orders 200 units every month, and they pay for it in cash. Because of the loyalty of this customer, they receive a trade discount of 5%. Note number 4, we are told that the data collection works as follows. It's 10% in the month of sale, very important. Sometimes we don't have an accounting problem, we have a reading problem. It says in the same month, 10%. Then 50% collected in the following month, 35% collected in the second month, and then 5% is never collected. I've highlighted the bad debts there because the credit losses or the bad debts are not accounted for when we set up cash budgets. The very problem with this is that we will not get the cash, therefore it's not a cash flow item and it is not recorded as such. It is, however, an expense which is recorded in the statement of profit or loss and other comprehensive income. In note number 5, we are given the credit sales that took place during the previous months. And they are 25,000, 26,500, and 36,050. Note number 6, quite interesting. We have some selling and admin expenses there. They say 60% of it is paid in the month that it is incurred, and the balance is paid in the next month. Then it's important to note that they've given you all the selling and admin expenses from May through to October. And then beneath the table, there is a note that says depreciation of 15,000 Rand per year is provided for monthly and it is included in the selling and admin expenses. This is very important because you need to remember that we need to now remove the depreciation from the selling and admin expenses. So from May to October, we need to take it out. Again, depreciation is not a cash flow item, so therefore it will not be presented in your cash budget. If we record depreciation, we debit the depreciation, we credit the accumulated depreciation. And this means that we will therefore not have a bank entry which indicates that it is not a cash flow item. In note number 7, there's some provisional tax of 7,500 to be paid in August. And in note number 8, they say that the company is negotiating a loan worth 50,000 Rand and it will be received at the end of August. A simple interest rate of 12% applies, and the monthly interest as well as the first installment of 5,000 Rand is payable by the end of September. The final note says that on the 1st of July, Zuzu traders had a bank overdraft of 4,800 Rand. The required part asks you to complete the cash budget for July, August, and September of 2017, and the total marks there 30 marks. Rounding needs to be done to the nearest whole number and indicate all your calculations clearly. So I want us to start at the beginning of this question and calculate our purchases as well as our sales. So I have so long set up an organized way of doing these calculations. So in the first column, I first want us just to focus on this block. I'll just put it in a frame. So here I want us to first look at how I calculated the total purchases. So we were told that in June there was 1,500 units that we purchased at 18 Rand. In July, 2,000 units were purchased at 20 Rand. In August, we have purchased 36,000 Rand because it's 1,800 units times 20 Rand. And for September, it was 2,400 units at a total of 22 Rand a unit. Something that is very important is that we have closing stock in this question. If we go back to the question, you will remember that it was indicated in the second part of the question that 90% of the inventory is sold in the following month. So you will note that not all of the inventory is sold in the following month. So the second thing I think we should do is to calculate the closing stock. Something that is very important to remember is that the closing stock is calculated at the cost price. So please do not confuse the closing stock with the sales, because for the closing stock, we will use the cost price because closing stock is recorded at the cost price, which we calculate in terms of the production or the purchase. So please note that closing stock is at the cost price. And we are told that 90% of it is sold. So therefore, we can say that of this total purchase, 10% will remain to be closing stock. So I am calculating the closing stock in each instance. And then we can go back to our total sales. So for sales, it is important to remember that there is a markup. Sales will be done at a profit margin because you want to make a profit. You don't just want to break even. And we were told in the question that the markup is 50% of the cost price. So I will then say here that the total purchase was 27,000. I need to have a markup of 50%. So therefore, I will times it by 1,5, or you can also say times 150 over 100. And then I'm going to multiply it by 90% because the other 10% that is not sold is contained under the closing stock here. Then for the July, again, times 1,5 to add the markup, and then 90% of it. For August, again, adding the markup and taking into account that only 90% of it can be sold. Same for September. Right, then we have cash sales that we have to calculate. I have split it into cash sales and then also the cash after the discount, just to make sure that everybody's on the same page. So for the cash sales, we are told that there are 200 units that are sold to a loyal customer every month. Then we see that the cost price in June was 18 Rand, and because it is a sale, we need to add a markup of 1.5. In July, there's also 200 units that are sold. In July, the cost price is 20 Rand, and I'm going to say times 1,5 to record the markup because we are working with a cash sale. Same in August, 200 units. The cost price in August per unit was 20 Rand as well, times 1,5. And then in September, 200 units and in September, the cost price rose to 22 Rand at 1,5. Of course, this loyal customer receives discount, which means that we need to make provision for a 5% discount. So the cash sale after discount will basically be the cash sale at 95%, which is 100% minus the 5% discount. Just correct that. Right. We are left with calculating our credit sales. So this is quite a tricky bit. So I want us to first take into account what is already unavailable for credit sale. So if we look at June, I believe that we are told that there are 1,500 units that are sold. In July, if we just go back to the question, in July, there's 2,000 and 1,800 in August. So it's 2,000, 1,800. And then in September, I believe it was 2,400 units. The closing stock, and so I'm doing a calculation here now in terms of units for the units so that we can see how many units are remaining and these units will be sold for credit. So the closing stock will be 10% of our units, and the cash is always 200 units every month. So that one we can just fill out. This should be 200, 10% there, 180, 10% there, 240, 10% there. So the remaining units is then the units that are available for credit sale. So I'm just calculating them in each instance. So I am saying the total units that are purchased minus the closing stock units that need to be kept minus the cash units that are sold every month. And that gives me the answer of the remaining units that may be sold on credit. Now I can go back to my credit sales and say, in June, it is 1,150 units that are available for sale. In June, the cost price is 18 Rand, and I need to add the markup because I am busy with a sale. In July, we are going to say that there is the credit sales of 1,600 times the cost price of July, and the cost price was 20 Rand, times the markup. Then there were 1,420 units available for credit sale, times the cost price in August, which was also 20 Rand, times 1.5 markup. And then in September, we're going to say it is 1,960 units that are available for credit sale. The cost price is 22 Rand times 1.5 markup. Right, so there we have calculated June, July, August, and September. Then something that is important to remember is that we refer to node number 2, and here we are told that 90% of the inventory is sold in the following month. So in effect, in terms of our sales, we need to take into account that this will be for the following month. So June will be in July, or July will be in August, August will be in September, September will be in October. So in terms of the sales, we are running 1 month basically behind. So June becomes July, July becomes August, August becomes September. Very important to remember. All right, so now we can move on to calculating our debtors collection. So you know by now that I like to calculate my debtors collection in a block by using the months of information that were provided. So April, May, and June was given, I believe. If I look at April, it was 25,000 and then 26,500. And that was for May. The credit sales of June, 36,050 Rand. In July, we've just calculated the July credit sales because the sales based on the purchases of June will realize in July. So that's 31,050. For August, we will have our credit sales of July, and then of September, we will use the credit sales of August. Our data collection says that it is 10% collected in the first month or in the same month, then half of it in the next month, and then in the second month, 35% of it is collected. Then for May, we will again have 10%, half of it in June, in July 35%. Then in June, we will have, of course, 10% in the same month, half in the next month, and 35% in August. And they asked for us to round up to a whole number, so I'm just going to do that as well. Then for July, first collection will be 10% in July, half of it in August, and then 35% in September. In August, we will, of course, start in August. So 10% in August, half in September. I am not calculating October because it's not required. September, we will have 10% of September, and that gives us 4,260. Again, I'm just making sure that I am rounding to whole numbers as per the instruction. Then I am getting to a total for July, August, and September. We should also consider in these calculations our creditor payments. So I've also set up basically my calculation or my layout for that. So the total purchase of June, we can just go back to our original calculation, was 27,000. In July, the purchase is 40,000. In August, 36, September 52,800. We are told in the introduction of the question that we have a credit period and that we pay 1 month after purchase. So in this calculation, we will basically say for June, we will have a payment in July, for July a payment in August, and for August a payment in September. I'm not calculating October because it's not required. Right, then the selling calculation for our selling and admin expenses. Here we are given an amount and then we have to go and calculate what it will be net of the depreciation. So I believe in this question we are told that the depreciation is 15,000 Rand for a year and we need to divide it by 12. So that means it's 1,250 Rand per month. The selling and admin that we were given is for May, 9,500, then 10,800, then 11,000, then 10,900, and then 11,600 for September. I am not including October because we are not doing calculations for October in terms of the required part. So net of the depreciation, I will now say the total amount given minus the depreciation that needs to be taken out. Right, so now we have our selling and admin costs net of depreciation. And then we can go and basically do a calculation for the payments, because we are told in the question it is 60% is paid in the month and then the balance in the next month. So it's basically a 60-40 split. So I'm just copying everything here. In May, we will then pay 60% in the month, and then the remaining it will be in the month after, which is 40%. In June, we will pay 60%, and then the remaining in July. For July, we will pay 60% in July, and the remaining in August. In August, we will pay 60% in August, the remaining in September. And then, of course, for September, 60% of September. I am not calculating my October, doing the calculation for October. Right, we need to add up July, August, and September, for those are the required months. So again, I'm just adding up the calculations I just did. Right, wonderful. I think having done all these calculations, we can now finally have our cash budget. Right, so for the cash budget, we have, I'm just going to leave a column for the calculations. So we have July, August, and September. We have an opening bank total. Then we will have some receipts. And we will also have a number of payments. Bold that, bold, and then we have closing bank. I believe that we were told that our closing bank is an overdraft of 4,800, our opening bank, I beg your pardon. Then our receipts, I know that there are some cash sales that we need to record and also some data collections. And in the one instance, we also receive a loan. So what are the cash sales? Oh, and in the other one, there's also an auction sale that takes place. So the cash sales for July, if I go back to my table, in July, our cash sales after discount, 5,130. Then the cash sales in August, if I go back to my table, 5,700, and then also 5,700 in September. Our data collection we have calculated, so I'm just going to put those values in place. Right, then we receive a loan. If we go back to the question, they say that we are negotiating a loan, and this loan is received at the end of August for 50,000. So I'm just going to go to August and put in the loan that we receive of 50,000. Then we have an auction sale that we need to account for, I believe, in September. So in September, if we just go back, they say we are selling the closing stock at cost for cash, and it is June, July, and August closing inventory. So I'm going to go to my calculation, and it seems to me like the closing stock for July, August, and September, I just need to add it up. So I'm going to say it is basically then the sum of those three, 10,300. Right. I just want to insert a row here so that you can see properly. Right, payments. We have some creditor payments that we need to do. Then I believe we have a loan repayment. We also have some interest. So for the creditor payments, again, I'm just going to go back to my calculations. And for July, it was 27,000. Then it was 40,000. And in September, it was 36,000. Our loan repayment, if we go back to our question, our loan repayment was 50,000. We received 50,000 rand. They say at the end of September, 5,000 rand is due as an installment, and then we also need to calculate the interest. So I'm first just typing there. The loan repayment is 5,000. The interest will be 50,000 at 12% times 1 month. 500 rand. There's some provisional tax. The provisional tax, 7,500 to be paid in August. Right, and then we also had some selling and admin. And we did that calculation, so I'm just literally going to look for the figure and putting it under the correct month. Okie dokie. Let's just go through the question again. Make sure that there are no items that we have forgotten about. No, we seem fine. So in this instance, we can go and get totals for our receipts. And totals for our payments. Just going to round that to a whole number as instructed. Right, so there's our receipts. Then also we need to add up our payments. And we're just going to bold it. Then closing bank will of course be our opening bank plus the receipts minus the payments. Opening balance becomes closing balance. Closing balance becomes opening balance, I beg your pardon. Right, and there we have also successfully calculated our closing bank balances. I hope that you have enjoyed this interesting question. I think it's a very, very good question, and it's worth reviewing because it does contain a lot of interesting calculations. All right, so I will then see you in class, but until then, keep well.